Welcome back to the Iraqi Dinar, where we track currency movements and global financial trends that could directly impact your investments. Today, we're diving into a major development that has just sent shockwaves through the currency world. Vietnam has officially revalued its currency. Yes, you heard that right. The Vietnamese dong has surged in value, and the effects are already being felt in markets around the globe. Investors everywhere are paying close attention, and one question is dominating the conversation. Could Iraq be next? If you're holding Iraqi dinar or closely following global currency realignments, this could be the moment you've been waiting for. So let's break it down. What just happened in Vietnam, what it means for global currency markets, and why this might be a turning point for Iraq and the dinar. Vietnam's decision wasn't a small adjustment. It was a bold, decisive revaluation that surprised even experienced Forex analysts. For years, rumors and speculation circled around whether Vietnam would make a move like this. Many thought they'd delay, but they didn't. They acted, and the result? The dong's value jumped almost overnight. This move wasn't just a financial maneuver, it was a clear message. Vietnam's economy has been showing real strength. Manufacturing is booming, GDP is growing steadily, and export numbers are climbing. Instead of just signaling confidence, Vietnam showed it in action. They didn't just say they were ready for a stronger currency, they proved it. And now global attention is shifting rapidly toward Iraq. So what is a currency revaluation, and why is it such a big deal? In simple terms, a revaluation is when a country increases the official exchange rate of its currency against major global currencies like the US dollar or the euro. This typically reflects growing economic strength, improves a nation's global purchasing power, attracts investment, and reduces import costs. In Vietnam's case, their improving fundamentals created a compelling case, and they followed through. Now let's talk about Iraq. The Iraqi dinar has long been viewed as undervalued, especially by investors who believe in the country's long-term potential. Many of you watching this have been holding on to IQD for years, waiting for a moment just like this. The official exchange rate has remained suppressed, but beneath the surface, a lot is happening. Iraq has been making quiet but substantial moves, reforming its economic structure, benefiting from strong oil revenues, modernizing its banking infrastructure, and facing increased international calls to reflect the dinar's real value. These aren't just isolated developments. Together, they're building the foundation for something significant. And now, with Vietnam setting the precedent, market chatter is getting louder. What was once whispers among financial insiders is now a growing roar. People are asking if Vietnam took the leap. Oil is central to this conversation. As most of you know, oil remains Iraq's primary revenue source. With global oil prices rising, more capital is flowing into the central bank of Iraq, helping to grow its reserves and strengthen the country's fiscal position. This kind of economic strength provides the support needed to back a stronger currency. It's not about ego or image, it's pure economics. But Iraq isn't just relying on oil anymore. There's a strategic push underway to diversify the economy. The country is moving into agriculture, technology, infrastructure, and international trade. According to recent reports, Iraq is now tapping into over 60% of its non-oil economic potential. That's a game changer. From major infrastructure projects to foreign investment deals, Iraq is laying the groundwork for a more balanced and resilient economy. And that's the type of environment where a revaluation becomes more than just possible. It becomes probable. Many of the signs we saw in Vietnam before their revaluation are now appearing in Iraq. Analysts, insiders, and prominent voices in the currency world, people like Frank26 and MarkZ, are pointing to rapid shifts in Iraq's financial posture. We're seeing the rollout of new digital payment platforms, updated banking regulations, and an increasing number of regional financial agreements. These aren't just routine updates, they're steps toward financial modernization, and many experts believe Iraq may be in the final stages of aligning its financial system with global standards. Of course, we have to stay realistic. Iraq still faces challenges. Political instability is one of the biggest hurdles. While Vietnam benefited from a relatively stable political environment, Iraq continues to navigate internal divisions and external pressures. A revaluation can't be rushed. It requires not only economic readiness but also political coordination, public trust, and global support. But something has changed. The Iraqi people are demanding reform. Public pressure is mounting, from social media campaigns to debates in parliament to demonstrations in the streets. Citizens want economic progress, and they're holding their leaders accountable. With upcoming elections on the horizon, the government is under pressure to act. A bold move like revaluing the dinar could dramatically improve public morale, restore confidence in the financial system, and prove that Iraq is ready to rejoin the global economic community. Now imagine this. You walk into a shop in Baghdad, and your money now has double the purchasing power. That's the kind of real-life impact a revaluation can have. And for international holders of dinar, the implications are even more powerful. If the dinar is revalued and recognized by the global banking system, the potential return on investment could be life-changing. That's why so many are watching Iraq right now. That said, we must also be clear about the risks. A poorly executed revaluation could lead to serious issues, like inflation, black market manipulation, or disruptions in trade. It's a complex process that requires precision, planning, and balance. But if managed correctly, Iraq is in a better position than ever before to... We've seen this playbook before. Kuwait successfully revalued its currency years ago under similar conditions. A strong economy, international backing, and a well-structured monetary policy. Iraq appears to be following a similar model. And with Vietnam's revaluation making headlines, the momentum is building. Currency traders, hedge funds, and private investors are shifting their focus. The mere suggestion of a rate change in Iraq could trigger a global market response. That's why it's so important to stay informed. Don't just passively watch the news. Analyze what the Central Bank of Iraq is doing. Every policy update, financial report, or international agreement could be a signal. Even something as simple as a change in cash handling procedures could offer clues about what's coming. We're entering a pivotal window of opportunity, but this is also a moment that requires strategy, not speculation. Smart investors are adjusting their portfolios not based on hype, but on fundamentals. Some are increasing their IQD exposure. Others are monitoring developments closely, ready to act at the first sign. If you're thinking about expanding your position, ask yourself, do you truly believe Iraq is on the path to reform, modernization, and global integration? If the answer is yes, then you're not just speculating, you're investing in the country's future. And let's be honest, the potential upside, if a revaluation happens, could be extraordinary. But be wise. Currency investment is inherently volatile. As always, we recommend diversification. Don't put everything in one basket. Consider balancing your dinar holdings with assets like stocks, real estate, or even commodities such as gold. That way, you're prepared no matter how the market moves. Vietnam's revaluation showed how quickly things can change in the currency world. If Iraq follows a similar path, the window for smart investing could close just as fast. The key is to be prepared, be informed, and act with intention, not emotion. To wrap this all up, Vietnam just made a historic move that redefined its currency's role on the global stage. That single decision has lit a fire within the currency investment world. Now all eyes are on Iraq. Will the dinar revalue? No one can say for sure. It could happen in days, weeks, or months. But what we do know is that the building blocks are being put in place. Iraq's economy is strengthening. The people are pushing for reform, and global interest is rising. If you're watching this channel, you're already ahead of the curve. Thank you for joining us today. If you found this breakdown valuable, be sure to hit that like button, share it with fellow investors, and subscribe to the Iraqi Dinar Channel for more in-depth analysis and updates. And let's hear from you. What do you think about Vietnam's move? Is Iraq next? Drop your thoughts in the comments below. Let's keep this conversation going. Until next time, stay sharp, stay informed, and remember, knowledge is your best currency. This is Ali with the Iraqi Dinar Channel. I'll see you in the